The calm that tricks people. Your bank app works. Your card works. Your paycheck lands on time. So most people assume everything is fine. That assumption could cost them in 2026. Because the biggest banking risk right now is not a dramatic collapse. It's not people lining up outside branches. It's not emergency headlines. It's something quieter. Banks can stay open, look stable, and still slowly make your financial life worse. That's the silent risk nobody is talking about. What the risk actually is. Banks are under pressure from both sides. On one side, many banks are still dealing with the after effects of higher interest rates from recent years. Assets bought in the low-rate era became less valuable when rates rose. On the other side, customers now move money faster than ever. If one bank offers better returns, people transfer funds in minutes. If bad news spreads online, confidence can disappear overnight. That means banks now operate in a world where trust moves faster than balance sheets. And when institutions feel that pressure, they usually don't announce it. They adjust quietly. That's where regular people feel the damage. How you feel it first. Most people think banking problems start when money disappears. Usually, they start much earlier. You feel it through lower savings returns. You feel it through new fees. You feel it through slower loan approvals. You feel it through stricter credit checks. You feel it when customer support becomes harder to reach. You feel it when your bank suddenly becomes more cautious. That word matters. Caution inside banks often becomes friction for customers, and friction costs money. The savings trap. Imagine inflation cools down. Prices stop rising as fast. You expect your money to breathe again, but your savings account still pays almost nothing. Meanwhile, the bank earns more from lending and managing spreads. Your money is technically safe, but it is quietly losing opportunity. This is how many people fall behind without noticing. No bad purchase, no market crash, no huge mistake, just years of cash sitting still while everything else moves. That's a silent wealth drain. The credit squeeze. Now look at borrowing. When banks feel uncertain, they protect themselves. That means harder mortgage approvals, higher borrowing costs, lower credit limits, more rejected small business loans, less flexibility when you need help. To the public, it looks random. To banks, it looks responsible. But when enough institutions tighten at once, the whole economy slows. Families delay buying homes. Businesses delay hiring. People postpone plans, not because they chose to, because credit became harder to reach. That's how hidden banking stress spreads into everyday life. Why nobody notices. Because it doesn't feel like a crisis. There's no dramatic soundtrack, no breaking news banner. No one says, your bank is weakening. Instead, people say, everything feels expensive, it's harder to get approved, my money isn't growing, why are there more fees now? Those everyday frustrations often trace back to the financial system becoming more defensive. But because it happens slowly, most people never connect the dots. What smart people watch? Instead of asking, will banks fail? Ask better questions. Are banks competing for deposits or quietly paying less? Are loans getting harder to secure? Are account rules changing? Are fees increasing? Are businesses complaining about financing? Are customer policies becoming stricter? These signals matter more than commercials about trust and convenience. Banks sell confidence. Pressure shows up in behavior. What to do now? You do not need panic. You need awareness. Start with simple moves. Check what your savings account actually earns. Review fees you've ignored for years. Know how your deposits are protected. Avoid keeping all cash in one place out of pure habit. If you run a business, build more than one banking relationship. Keep some emergency liquidity easy to access. And if debt is already heavy, reduce exposure before credit conditions tighten further. None of this is dramatic. That's why most people delay it. But boring preparation beats emotional reaction every time. The bigger lesson. The real banking risk in 2026 is not collapse. It's dependence without attention. Millions of people trust systems they never review. They accept poor returns. They ignore changing terms. They assume convenience means safety. They wait for headlines before taking action. By then, the cost has usually been building for months. sometimes years. What to do next? Open your banking apps after this video. Check your interest rate. Check your fees. Check your backup options. Check how much trust you've placed in autopilot. Because the loud risks get attention. The silent ones drain wealth slowly. If you want more sharp finance breakdowns that actually matter in real life, subscribe now.